Bitcoin is in the news today. I'm pleased to have three phenomenal guests on our limited non-consensus investing podcast. We've got Alex Thorn, who's head of research at Galaxy Digital, who dropped a terrific report on flows in Bitcoin. We've got Pranav, who's the portfolio manager at VanEck, covering digital assets, and Quinn, who's a friend, VP of Capital Markets, head of Capital Markets, at Maple Finance, which is a lending protocol. And in the last week or so, I've had informal conversations with folks here, and I feel like every other day, my view on the question around Bitcoin is changing with new information. So we said, look, let's elevate this to a public conversation. Let's focus on truth seeking. Let's look on both sides of the debate. And the question is, hey, is this Bitcoin ETF, is it a buy the rumor, sell the news? Is it a buy the dip? Is it an event to bring on to new highs? How do we interpret this? What do we make sense of it? So we'll start off by cycling through the key views. We're going to keep it open, interactive, and Socratic here. So let's dive right in. Alex, do you want to lead us off with, actually, Pranav, why don't you lead us off with the metrics to frame up Bitcoin? And we'll turn to Alex with your thesis on what happens next.
Yep, happy to. And just to caveat this, obviously none of the stuff I say is anything like financial advice. My guess is as good as your guess. But we track a lot of these metrics just to really, understand what market structure looks like. So as we speak, open interest on Bitcoin is around, I think, 11 billion if you exclude CME, obviously much higher. I think CME last I checked was somewhere between 4 to 5 billion. So you can add that on top. If you go back further, and this is in dollar terms, so obviously you can look at it in Bitcoin terms, we're kind of at the same levels in terms of open interest as we were, kind of around May 2021, which was, right after you had this big Bitcoin correction when China decided to ban Bitcoin mining in the country. So, this is kind of substantially off the bottom. So the bottom after FTX collapse was around 5 or 6 billion. So you've kind of built up a whole bunch of open interest in the futures market. From a funding rates perspective, it was very, very high yesterday. I think it was annualized almost 30+%. Right now on a live basis, it's closer to 10, 11% annualized. So, given the move we had this morning, funding or at least leverage in the market is generally reset. So, open interest went from say 12 billion, excluding CME, to almost 10 and a half. And then, obviously funding rates also reset meaningfully. So I'm happy to share my screen, by the way, if that's useful to anyone. Ooh, Ram, I think you're on mute.
Oh, sorry about that. No, feel free if you'd like to share your screen, or really anyone else as you share your perspective, right? And we also had that news headline from Matrix Report where they put out a piece saying that they expect the SEC to deny these ETFs. Quite provocative and seems to have caused some of the sell-off.
Yeah.
Alex, what's your take?
I take my news from Alex.
On the Matrix report, I thought this was quite puzzling. I found the logic and arguments to be extremely deficient in a number of ways. Frankly, in some cases, nonsensical. For example, they claimed that, and I'll get to my real take here in a second, but just since this is the news of the day, they claim that the bull run in the fall was started by Franklin Templeton's ETF filing in September, but in reality, the run didn't really start until middle of October on Cointelegraph's fake tweet, and then the next week on the Gamma Squeeze. Not to mention, they also said in that Franklin Templeton, they had then become, at the point that they had filed, the second large traditional finance asset manager to file an ETF. That's not true. Invesco, Fidelity, Wisdom Tree, VanEck, ARC all manage more AUM in ETFs and had all previously filed. They have this argument that there's not a sufficient surveillance sharing agreement in place with Coinbase because Coinbase doesn't represent a regulated market of sufficient enough size. But actually, that entire argument was invalidated by the DC Circuit Court of Appeals. It's totally irrelevant. And then they have a bunch of conjecture about the SEC commissioners themselves probably voting against it, even if the staff recommends it. That's just totally made up. I mean, we don't know how individual commissioners might vote or react, of course, but again, that's just like somebody shooting from the hip. So, and then I don't know if you read Jihan Wu's tweet today, but I thought it was.
Oh wait, Alex, you missed the best part of the report. At the end, they were like, "Hey, we got some great put options you guys can consider."
Yeah,
right?
Exactly.
It was like, "Let's try some flows."
Yeah, exactly. So, I did think it reflected badly on Bitcoin markets generally, if that was the main catalyst. And of course, other markets were down this morning too, right? It wasn't just Bitcoin, but I think that was certainly part of a catalyst, at least during Asia hours. Obviously, we rebounded since then, but it shows the relatively low liquidity of this asset class still, and that will change with an ETF. I think to one of my big takes, I think, for this year is that this is going to be across crypto markets a year of clashes of the titans. I don't know if that's the text I'm going to stick with when I publish about this, but Bitcoin is about to crash a giant wave into Wall Street. I think if it doesn't happen, in the next couple of weeks, it will happen sometime this year, right? And I don't know if the world is ready for that. And I don't mean that in a bad way. I mean, I think people are going to be very surprised by the impact that has on people's portfolios, on the markets.
I'm glad you clarified that. Alex, when I first heard you say, I think Bitcoin is going to crash, my heart skipped a beat.
I saw you come off mute for a second.
And then you said, in a big way on Wall Street. Crash in a good way. This is the good blow up type. Just to clarify for everyone.
Think of a giant wave that you can surf down, with a nice tunnel. And I think, honestly, like, this is 15 years in the making, obviously, for Bitcoin, but even 10 years in the making for a Bitcoin ETF. It's going to be huge. It's going to reshape many traditional markets and portfolios. It's also going to reshape Bitcoin markets in a lot of ways. People will be writing options and borrowing off their ETF holdings. So it'll sort of reshape some of the way the prime brokerage business in Bitcoin works. And I won't go down the list, but you've got Ethereum versus Solana. You've got real world assets versus the Fed. You've got a whole range of interesting clashes that are yet to play out in 24 regulatory jurisdictions against each other. So I think it's going to be a year of significant change, frankly, and it's going to be exciting.
I love the perspective. And what's your view on this ETF approval specifically? My view is that this ETF gets approved, notwithstanding the report from Matrix Port, which I think everyone's kind of debunked here. And by the way, like, you'd want to buy puts before that report, not after the report. That horse out of the gate.
I think it's very likely. I think there's a bunch of reasons why it's likely. The simplest one is that the only two arguments ever made by the SEC to oppose it have both been resoundingly struck down as arbitrary and capricious by the single federal court that literally oversees the SEC, right? So that's the simplest reason, that there is no existing articulated argument to deny them, right? So they'd have to come up with something new. There's obviously all the other signs we see that are being well reported on, meetings between issuers and the SEC, or even today I saw reported that there were meetings between the exchanges and the SEC about this. I mean, they don't do all this work and make everyone work over the holidays if they're going to turn around and reject them for some new reason, which, by the way, would have to be new. So I think it's very likely. I think there is, even if the existing sentiment around Bitcoin between today and 2 months from now doesn't change at all among people in the world, there's a huge amount of potential inflows to come in, just because this segment of the investing ecosystem doesn't have access to Bitcoin exposure yet. And so even if they just get exposure in the same percentage they might, everyone else are, even if it's less than the rest of us.
And this
right?
segment,
should be
you're referring
inflows.
to, who do you define as this segment? Like RIAs, sovereigns, or folks that can only access public securities, or what's the incremental market?
Primarily wealth managers and financial advisors affiliated with banks and broker dealers, and then also some independent RIAs as well. So,
and GBTC is not an adequate, suitable enough product format for them.
Definitely not from a suitability standpoint, merely because of the fees and the the premium or discount. But also, I mean, we know most of the broker dealer advisor platforms don't allow the trust to trade on their
Alex, I
platforms.
was gonna say, I use one of the large RIA platforms myself personally, and I have my IRA with them, and I've always asked them, hey, can I buy these OTC products? And the answer's always been no, like, it's not allowed for whatever reason.
And they do a lot of like approval and compliance decisions. And by the way, they don't have to just be compliance. It's not like it's illegal to buy the over-the-counter trust, but there are suitability. I mean, there are some of those platforms, Pranav, that don't allow you to buy cannabis equities, right? Those are totally legal.
Exactly.
They just don't allow it, right? So, and by the way, most of them, I'm not aware of one, a major bank or broker dealer wealth advisory platform that allows them to buy the futures-based ETFs either, frankly.
Yep.
Some of them do allow private vehicles. So I know, like, you know, I don't want to name any of the platforms or the issuers, but there are some that have struck deals with, you know, crypto asset managers, you know, not Grayscale, but others that have private placement vehicles that some of their end clients can go into, but those options are limited, and also they don't allow everyone to go into them, right? It would only be like some huge client they have to appease.
Right. So it's a market expansion opportunity.
Exactly.
And you view this tactically just today, as opposed to the 2024 outlook. How do you view markets on trading behavior, both on approval and then launch, which could be a few months in the future?
I think a lot of crypto native money is mostly max long already here. It's what brought us over the last, you know, we'll call it 15K in Bitcoin price. I think there's incremental net new crypto money to come, but I think the real question has been from the institutional side. I can tell you, like, at 25K back last year, institutional counterparties of ours that had traded Bitcoin, right? Not like they're just deciding to. They had traded in 21 and 22. They finally picked up the phone after, you know, 16 to 25. It took till 25 for them to say, like, oh, hey guys, we're still here, right? And then they didn't buy, right? And then at 30, they're like, what do we think? Is it gonna come back? And then they didn't buy. And I know many that still have never come in, right? And so I really don't think the institutions are here yet. I think it's, in their mind, I think it's possible that, you know, you think about an ETF approval, both the actual creation of the market access vehicles that can allow this new market expansion, but also I hate to call it this, a stamp of approval from the Securities and Exchange Commission, at least on the concept of owning Bitcoin, which is what these will be. I think in a lot of institutional investors' minds, if that happens, there's plenty of more room to go. They don't need to try to front run that. It's not like they're out here trading on crypto exchanges or even, you know, bigger financial advisors or, you know, trading CME futures. Really, you see some of the hedge fund community here and doing that, but outside of the sort of faster money hedge funds, I don't see a ton of institutional interest yet, which tells me, of course, that we can certainly go higher if these products are approved.
So the thing I go kind of like, I'm like very mixed, and I keep asking the same question myself, which is, how does the next, let's just say 2 months look, right? That's really all the stuff we're talking about, because our brains aren't really wired for long-term thinking sometimes. So so I'll sort of share like the two angles, one that gets me bullish, one that gets me bearish, right? So at least I'll lay it out there. I'll share my screen real quick. So to the point on positioning, you know, you've had a bunch of positioning in the futures market ahead of this, as we've talked about. And one way you can look at it is sort of the 3-month annualized basis, right? So, you know, just look at it where we were, you know, last year, going all the way back, and now you're kind of, you're like typically Bitcoin basis.
Velo data, let's go. I love Velo data.
Yeah, this is one of the most useful platforms I use just to watch these things. But anyway, so we were kind of hovering on that like 1-2% kind of basis range, and now all of a sudden we're sitting here at like 15%, right? And then, you know, it was much worse yesterday, so it's better out. You're better off today. Kind of just tells you there's some quote unquote fast money in the futures market, and then this rate is paid by people using leverage. So to the extent, you know, you don't get the price appreciation that requires to offset this cost of capital, there is sort of unwinding potentially there. And then, you know, the other thing that I think is also sort of worth considering is like, we always look at this sort of this funding rate mechanism, which is more or less the purse market, but is also like useful to look at the funding, like the annualized basis rate as well. Now, like, the flip side to all of that is, I was in Singapore, Hong Kong in September, and this ETF conversation had just started. Met a whole bunch of sort of, you know, multifamily offices and single family offices, private banks, and so on. And they all generally viewed a Bitcoin spot ETF as a catalyst of some sort to change their views around the asset class itself, or just Bitcoin alone. So part of me wonders if there is potentially kind of spot demand that is sort of dormant in Asia that gets activated as a result of the spot ETFs, right? Sorry, going back to my screen. This is another like the thing that piques my interest on that is this little chart right here, which is cumulative return by session, right? So if you look all throughout the last couple of months, Europe and US is where US hours is where Bitcoin returns were really coming from. Asia was actually a detractor, right? And at the start of this year, Asia has become at least heading in the direction of being a positive contributor to returns. Kind of just tells you where the money is coming from. So I wonder if there's sort of spot demand that can perk up out of Asia if their Bitcoin spot ETFs are approved, if that makes sense.
Right. And what's your net Pranav? Like there are different considerations here. You talked about the elevated funding rates, the elevated open interest, which suggests that, that there's elevated sentiment. And Alex talked about how crypto's long in, mostly in, right? So net, is there an incremental bid on approval, or is it a sell the news event? And obviously launch is a different event altogether. How do you view that, and recognizing that views might change tomorrow in a fast and dynamically changing world?
Yeah, and I think my general view is given the large amount of move we've had in this asset class in general over the last 6 months, 12 months, there is room for pullbacks or just deleveraging like we've seen, like for example this morning, right? There's kind of, even though the report was kind of nonsensical, it just showed you how people are positioned and what can happen. So my general view is you could get sort of pullbacks on sell the news type pullbacks, but those are likely to be shallow, is my personal view. You have a Bitcoin halving catalyst. Everyone's kind of understands what that means for the supply of Bitcoin and then what that has historically done to price. So you're always going to have some cohort of people out there with capital that will sort of, you look at these pullbacks as somewhat of an opportunity to sort of get ahead of the catalyst itself or the Bitcoin halving cycle. And at the same time, I talk to other fund managers that are similar to me. One thing when you look at crypto fund manager returns in 2023, one thing that becomes obvious is a lot of them, if not a vast majority of them, underperform Bitcoin as a result of being underexposed. Right? Everyone was bearish last year. Every smart person was calling for a recession, risk assets blowing up, all these things. And so every active manager, in my opinion, or just most active managers in the crypto space, has been underexposed, has continued to remain underexposed. And I think there's capital there that might get deployed on pullbacks. So yeah, my view is you might see some pullbacks because of some deleveraging like we saw this morning, but there's capital.
Those are buy the dip opportunities.
Yeah. Unless something massively structurally changes, right? So yeah.
Right. Quinn, let's get you in the mix here.
Yeah, I was waiting. So there's kind of three components to my view that I don't hear widely talked about, but I believe are very important and have really influenced my extreme long positioning for the last 3 months, albeit it has been reduced a bit. So number one is the macro. Going into Q4, you had this unbelievable macro setup of people freaking out about higher rates. That peaked in early October. Equities bottomed in late October, and that kind of paved the way for stocks bid, all risk bid, long duration bid, gold bid. And so you had what I don't think enough people give credit for within the crypto ecosystem is a tremendous macro tailwind fueling this run. So that affects a number of things, people reaching out the risk curve. And one of those things directly is my second point, which I don't think is well understood, is the impact of MicroStrategy on this market. So since November 1st, MicroStrategy has bought almost $1.5 billion of BTC spot. And in an asset class of this size, this liquidity, over a 2-month stretch, annualized, we're talking, 10 to 15 billion, which according to, Alex's report, which I thought was the best on flows for this ETF year one, that's an annualized amount of what a good estimation of the first year ETF flows done by Saylor and MicroStrategy in the last 2 months. Okay. Tremendous amount of macro, people are going out the risk curve, MicroStrategy providing a floor in this market, an extreme bid throughout the whole run. And then what that leads us to is,
Quinn, can I ask you a question on that just real quick? Sorry, I don't mean to interrupt your flow, but one of the things I always wondered is part of the reason it seems like this MicroStrategy bid exists is because it's the premium the stock trades at relative to the value of the Bitcoin.
That's the sole reason,
underlying business. where is that coming from? Like who's the cohort of people that's creating that capital inflow that is now facilitating this Bitcoin purchasing power?
So that's buyers who don't have access to these ETF vehicles, first and foremost. Traditional investors view MicroStrategy as a more pure play way to just go to Bitcoin versus a miner, a Coinbase, better even some, I've heard from some in the futures ETF, which how true is that now that the premium's at 50-60% is a little ridiculous. But you also think about how much of traditional equity trading is algo and quantitatively driven, where your model says go long duration, go long risk, go long tech. Okay, highest beta, there we go, MicroStrategies. And so I actually think that's an ironic part of this is there's quant algo driven shops that don't even care about saying, hey, I want to buy Bitcoin, let's go MicroStrategies. I think actually a huge amount of it is just algo driven, and it's actually impacting this reflexive buying pressure into the asset class and propelling everything up. So huge amount of buying. And you're starting to see these early signs of, well, not early, but FOMO, late leverage. Another aspect is vol. So it's very difficult for me to see that the floor falling out prior to the day because there's so many unknown variables. For instance, we don't know it's probably gets approved next Monday to Wednesday, probably starts trading the week after. Let's say that's the base case. But even upon approval, let's say you get a big rip and then it's to sell the news, let's say, it can't go down too much because there's still this variable that's 7 days out in advance the following week of when trading starts that we know it's not going to be negative flows. We know it could be 5 billion. It could be 1 billion, but it's not going to be negative. And so you can't. So that leads me to the third component that I think is really interesting and people don't think about too much.
Can I just throw a quick wrench in your argument? This is the other part of this that I keep thinking
is the
about.
futures, the deleveraging.
That so far, I'll share this other part. Just give me one sec.
And while you pull that up, Pranav, I think the other part, Quinn, would be, hey, you're saying, look, there's incremental demand coming from this, but what matters is versus expectation. Right? Do people expect yards from BlackRock or tens of millions? What is expected? And obviously, there's no market for expectation.
My point is mainly around you will not know that number until the day it happens.
Yeah. So the thing I that kind of generally concerns me is that historically, because I personally just followed this stuff for a decent bit of time, like you guys, when the miners start to quote unquote sell is when I get concerned. And there's always this lag effect where the miners are sending coins to exchanges, and you can kind of see that in the net positioning change of miner wallets, and then eventually there's some price impact. Right now, it's not always one for one, but historically it's like the miners are just smarter about how they trade their Bitcoin.
There's a negative divergence.
I disagree with that. Zoom this chart out and show the bulk of miner selling is at complete local bottoms, in my opinion.
So this was this was like Jan 21, right? Like the miners were selling at these prices, and you then eventually had this drawdown up here.
Yeah.
And then and I remember this. So anyways, like this, I'm not saying this is like one-to-one correlation. I guess what I'm saying is what you have right now is miners essentially who started selling, let's just say in early to mid-November. What's been the offset is sort of this excitement around this ETF and all this positioning in the futures market. If people then stop positioning that way in the futures market post-news, miners continue to sell, then what does that ultimately mean is kind of the thing I want.
Well, just to reconcile those 2 points too, I think the chart is showing here that when miners have peak selling, that's the bottom in Bitcoin. But we don't know today if we have peak selling. We have peak selling relative to the recent window of history, but there could be more selling yet tomorrow. It's a whole idea of you're driving a car, you're making a turn, and you don't know when you're on the straightaway yet. Are you still turning, or is that the end of the arc and now you can move forward?
And keep in mind, so the halving adds an interesting component, which we can talk about after, because I think that's a huge factor, alongside what happens day of, 1 week of, 2 weeks of, and then 3 months. I think miners know the halving's coming. They need to be destroying balance sheets. A lot of them already have, the ones that can. They're in a much healthier position, but they should be selling. Oil and gas companies don't hodl oil, right? So that's an important point. And I agree that should be watched because incremental flows matter. I also, though, don't look too much at them because most of them are Bitcoin moon boys who lever up their balance sheets at the peaks as well and issue debt to buy more. So anyways, the third point, though, is related to all this, and it also rebuts the recommendation to buy puts on this event. Is the number one thing that I think impacts all of this is the Bitcoin ETF is vol dampening. So think about the passive flows of equities, of ETFs. So what we've seen in the last 20 years is volatility coming down in the stock market, and we see VIX go lower and lower every year, set records. The opening of the ETF, like I said, it could be $1 billion, it could be 10 billion over 5 years, it could be whatever. But first and foremost, it's downside vol dampening because it increases this other avenue to trillions of capital, and it's actually upside vol steepening because we don't know until the day of it happening or the week after if those flows are $1 billion, 0, or 10 billion. So until that time, I don't think, my gut is that we go higher from here and that there is a point at sell the news, probably the day we start trading. But I think the longer term impacts is that vol dampening effect and actually a change of the market structure where we've seen cycle over cycle Bitcoin peak price appreciation get lower and lower from the previous cycle. So at first it was a 20x, then it was a 10x, then it was a 5x. And that's likely to continue because then as an asset matures, market capitalization scales, it takes more and more money to move it. You can't have those same parabolic moves. But this is actually a time, not over the next 2 weeks, but over the year, where that upside vol can come into play and be a lot higher and downside vol is damp. So maybe a consensus or non-consensus view I have is I don't think we go below 30K again. And sort of for that reason, I could talk about why, but for that reason, I think low 40s, say 40 to 42, 43 I don't think it really can be a sell the news. I don't think, or at least drastic. At 50, I think it's a sell the news or above if we start, those leverage funding comes back. So I'm kind of in this camp where, okay, we just had this huge flush. It's hard for me to get super bearish when we just had the second biggest liquidation event in the last 12 months. I think the window starts on Monday for approval. You're going to have all of TradFi wanting to get into exposure on Friday before close, maybe Sunday night if it's futures. And so maybe, you probably get another bid going into the approval window. Okay, maybe it gets approval. There's a week. Maybe there's another sell-off there as people have, hamster-sized attention spans, and we sell off because in that time frame. And then again, another bid because there's that upside potential, that extra upside volatility. And now that the ETF is out there and there's reduced downside volatility over the long term. And so I think that's why I'm in this range where I'm buying 40 and I'm selling 50 basically.
Spoken like a trader. So let me clarify a few points there. So first on the macro, you pointed out that macro is bullish. What are the specific metrics or elements you're looking at on macro? And have you seen a shift in your view on macro just in recent weeks? For example, I think the Fed's going to walk back the idea of a Fed pivot. I think is now consensus, and it's hard to get better than consensus soft landing. That's consensus. You can say soft landing for longer. That's what you can say. That's the best you can do. So what are the elements you're looking at when you talk about the macro case for Bitcoin?
Yeah. Q4, going into Q4, we were peak interest rates. I saw the CNBC clip of Rick Santelli, I believe I pronounced his name correctly, calling for 13% on the 10-year in October and screaming on CNBC. Yeah.
They know, they know nothing of that. That was
Yeah.
a Jim Cramer, they know nothing of that. If you remember that, that was August
Exactly.
07 when the Fed wasn't cutting rates and Jim Cramer had like a vein popping out of his forehead. I don't know if people remember
Yeah.
that. But anyway,
So you had this environment going into Q4 where we were peak positioning, negative positioning, peak negative sentiment. Fed's going to keep raising in perpetuity, and duration was getting cleaned across the board.
yeah,
That it was suspected that to shift because, as you know, like the Q3 GDP print, I think was the highest and it was the local high, and I don't think we're going to a recession, but I don't think that we're going to keep putting those numbers. So that means that the cost of capital and rates should come down. So huge tailwinds.
Financial conditions, economic
Exactly.
conditions.
Only to throw back what you were saying in terms of the Fed's going to turn hawkish next meeting. You don't think that the job openings number today changes anything?
No, I think it's not that they're going to turn hawkish. My view on the Fed is that the market misread what they said. If you look at what they said plainly, they said that there's a new question around what is the timing for cuts, and in the week after, and I tweeted about that the day they said it. I listened to the same thing anyone else did. By the way, last year at this time, markets expected a Fed pivot. There was no Fed pivot, and markets are hearing what they want to hear. And 3 Fed governors in the next 10 days from the Fed meeting started walking it back. So I think that's what it is. I think the bias is that they'll be easy. It's a question on timing and when it happens. It will be rate cuts. The question is it Q1 or
Well, by the way, like I'm not like a big Fed watcher and all these things, but generally it almost feels like the Fed does what the Fed does, markets do what they do, and then the story like fits the price action ultimately, right? It's like, so like, yeah, the markets might draw down from here for the next couple of months, and then we're going to say it's because the Fed did this and this, but it was maybe just like the markets weren't as asymmetric to the upside, and risk reward is not balanced the right way.
Fair.
I think that point is accurate, Pranav. I think actually in this cycle, we've been trained for 20 years to just care about what the Fed's going to do and what they say, and it's all about the FFR and short end of the curve. That works in a monetary policy dominant environment. But when you have inflation and fiscal dominant policy environment, meaning inflation is kind of, there's a floor when the government's spending 6 to 10% of their annual GDP in fiscal deficits, it puts this floor on inflation. And actually the Fed, as we've seen, is not really responsible for the bringing down of inflation. I think your point is accurate in that it's really the long end of the curve that needs to be watched here, and that will do what it's going to do. But events like the Fed affect market psychology and saying, okay, rates, long end rates peaked, we're cyclically moving down. Fed just gave us the green light. Now we're going to really overdo it down. Okay, there's a mean reversion here that needs to occur, and maybe that's the 10-year at 3 flop.
Yeah, it's a consideration. It's not a primary consideration. I'm going to lose sleep over. Like recall last year when the markets were expecting Fed rate cuts, never happened. Markets still rallied. In my mind, it turns on whether or not the economy continues to beat expectations, right? If it beats expectations and the Fed doesn't cut, that's still good for risk assets. If that's not the case, then there's an issue. Good idea.
Yeah. Oh, I just want to pivot the conversation just a little bit. So I think you guys were all around last cycle. The thing that scarred my memory from last cycle was we were all excited for the Bitcoin halving, and this COVID thing happens, and then that blows up the Bitcoin market. So it was kind of this black swan that like derailed the halving and post-halving trade to some extent early on in the year. And that's the thing I ask, because we all are probably on the same page, which is Bitcoin ETF is really positive, net positive. Is it positive, next month or in 6 months? We can debate it, but we don't, we're all kind of generally optimistic on how this plays out over the next 12 to 24 months. What are the set of black swans that you guys think about that could be the equivalent of COVID this time around?
Well, one I think is MSTR, which is Quinn's second point, right? So MSTR today is the new Grayscale. Now, remember the Grayscale Widowmaker trade had a premium, and so you had these hedge funds like 3 Arrows Capital that are motivated to do a carry trade where they buy spot, they sell forward, they can't lock it in, and they capture the prevailing premium at the time of delivery 6 months later. But that premium was a source of billions of dollars of inflow. Now, open question on what was the materiality of that in terms of what that meant for price. But it was a steady bid in the market. There was a rational incentive to buy Bitcoin spot and that conveyor belt is gone. Now, MSTR is the new conveyor belt. This is Quinn's second point, which I think is spot on. Now, and there's another point you raised, Quinn, on your Twitter, which is that if you get an ETF, then crypto equities and balance sheet holders like MSTR, that premium could go away. So does the bid from MSTR go away? And you got to look at that alongside when the bid from BlackRock steps up, and how long does that take, and how do those curves cross? And there's psychology to that too, because the demand for Bitcoin rises at higher prices. Higher prices attract more buyers, right? It's momentum asset. So that is something I'm trying to tease out. I don't know.
This is why it's ultimately, okay, this plus I do think macro deteriorates over the next 2 months. I'm with Ram on dollar strengthening. I think there's geopolitical risk out there that because the S&P is at all-time highs, every single person has forgotten about, and the oils can't go below the SPR government $70 put. So first and foremost, I think it's hilarious how this times up. I have this kind of a couple signal model things that told me sell everything January 8th. And it ended up being, from not even like a Bitcoin perspective, it was like a macro thing. And that's when the window starts. So I think it ultimately is a sell the news. I think you're just going to get run over if you try to time it before, because, this kind of floor I was talking about on Bitcoin. The reason being is those flows that are going to come from the ETF have already been coming from MicroStrategies. And to Ram's point, there's whatever it is now, $6 to $7 billion of Bitcoin on MSTR's balance sheet. The red flag to watch for, and I'm giving away all my alpha, but is when the premium of MSTR starts falling, because that's when, one, the spigot shuts off. That will happen. It should happen before. I laid out this trade in July when markets were frothy. I long GPT, shorted MSTR. I thought, I didn't think I'd get another crack at it 6 months later. And that premium is going to go flat. And then what should happen is you can think about MSTR as just a more expensive ETF. And no one should want to own MSTR when the ETFs are out. And so this continuously puts selling pressure on the premium. And the reverse, if you want to close a discount from MSTR, is selling Bitcoin, buying MSTR. To close the premium, it's selling MSTR shares to buy Bitcoin. To close the discount, it's selling Bitcoin to buy MSTR back. And so I don't know, Saylor is a complete and utter legend for concocting the Bitcoin ETF 2 years prior to its approval and being responsible for almost 7 billion of flows into the asset class, like right in front of everybody's face. But ultimately, I don't think it's that big of a deal, because if you're in MicroStrategies now, you're just you're gonna sell MicroStrategies, going to the Galaxy Bitcoin ETF. But there could be some, in certain vol liquidity events, that is a risk. I actually don't think it's that big of a risk. I think the premium just comes flat, because ultimately you would just want to own the ETF. But macro is my bigger worry over the next few months.
Ron, I want to unpack the thing you mentioned. Sorry, Alex, I didn't mean to cut you off. Feel free to go ahead, and I'll come back to you.
No, just real quick. I mean, I think your analysis is pretty smart here, Quinn. And I think people are overestimating the amount of the overlap between ETF buyers and MSTR buyers. I don't know a lot of financial advisors who are like, great, let's buy this 25-year history in a chart that is one of the craziest I've ever seen on earth, simply because they own this asset. There's more feels than data, but I mean, I would venture that MSTR is much more just on the retail side. It could be high net worth as well, but I don't think the advisor market that is going to be net new for ETFs has a ton of overlap to MSTR. Definitely some, but I think that would be my question on the overall thesis, is what is the level of overlap between those buyers?
Yeah, I don't think there's any reason to buy it after. I just think that when you do the calcs, the problem for MSTR is that it trades at about a 50 to 60% premium to book. and that's got to go away. Like the just no.
Yeah, I think for balance sheet holders in general, like that are using it. By the way, perhaps
miners
as well. Yeah,
yeah,
any sort of crypto linked equity that's trading as a proxy. Absolutely, when you get something pure with low fees, I think will be affected. Your point about geopolitics.
Coinbase. I mean,
yeah, I mean, they should start trading purely as businesses, not as necessarily vehicles for exposure to the liquid commodity.
Yeah.
But geopolitics, I think, is a huge risk to the market. I think it's, it looks slightly better, I guess you could say, than it did maybe a couple months ago. But I mean, those are clear black swan possibilities there, right? And we already know a lot of them, like the possible ones. Something in the South China Sea or with Taiwan, or obviously in Europe and the Middle East, all have active conflicts, basically, right, that are threatening to spiral, and they could. The other one that I think is more relevant just for crypto and even Bitcoin is just regulatory. There are significant, really screwed up regulatory problems with crypto in the US, right? I mean, everyone's been talking about IRS 650I this week because I guess people just realized that it's finally supposed to come into effect, even though people have been talking about this since the infrastructure bill in summer 21. But it's totally unworkable and impossible to comply with. The IRS themselves said they'd be impossible to receive all of them, right? So, but there's a sort of a slew of these that are either coming on the books or been proposed that are frankly just terrible for crypto in the US, right? And those could cause significant problems.
Brief digression on that one. I agree. I published an op-ed today in American Banker in defense of decentralization. It was co-authored by Anthony Scaramucci, as well as my friend Omid from Columbia, where he teaches blockchain. Take a look at that. The policy battles need to be won. And some of the regulators, like the banking chief, Michael Hsu, he cited Vitalik Buterin in his written remarks 5-6 times. But his point is, look, we just need a centralized blockchain. I get tokenization. Let's do that. But why decentralize it? And we got to win that battle. And the Blockchain Association and Coin Center are not engaged, and they need to engage on that. We didn't win that fight. Back to your point, Alex, on the overlap. Here's my quick take on that. One is, I don't believe the big legacy wealth managers, think here like Merrill, Morgan Stanley, Goldman Sachs, suddenly start offering Bitcoin to their clientele because it's an ETF format, right? They already will offer some of them Bitcoin, but it's through a qualification process. You got to be above 1 million in assets. And I think they'll stick to that. So the question is, what about the independent RIAs? That's the new market. And I think the independent RIAs, they can access GBTC today. And by and large, they do.
Yeah. Yeah, I think there's some truth to that. I would say that several of the big BD platforms do already offer Bitcoin exposure on a qualified basis, right? So you think like Morgan Stanley, right, has private funds from Galaxy and NYDIG on their platform. I don't see any reason why they don't add these. Obviously, the independent RIAs that trade through like Fidelity or Schwab or Pershing, right, those platforms, like they have I would say much lower. I don't want to sound like it's bad, much lower suitability standards because their users are independent from them. I think they'll obviously add it, on day one, or effectively as soon as they, take Fidelity as an example. I'd be shocked if they don't have it on their whatever it's called now, I forget, but their Fidelity institutional platform like immediately, right? Because they have their own, obviously. So I think you've got pretty much all the big banks several of the big banks are trying to be authorized participants on these things. Their prime brokerage groups are going to do stuff with this almost certainly immediately, right? Like whether it's options or securities lending or trading or whatever. So
they're doing that now. Goldman is doing that today, by the way, not in a prime brokerage securities format, but they are providing financing credit to Bitcoin.
So I do think, now I will say, like, part of the reason for the slow ramp up in our report is that we think the banks and broker dealer platforms, the big traditional wealth management platforms, will take longer, right? I mean,
by the way, that's my conclusion as well. I think there's a difference between BlackRock and the vast majority of the ETF issuers, which is that BlackRock's an asset manager. So if they say a portion of your asset allocation needs to be in Bitcoin, then decisions happen and buy orders get issued, as opposed to an ETF issue where you have a product and you're doing marketing and you got to see whether someone buys the product or not. Like VanEck creates all sorts of great products like SMH, the gold ETF. You're going to have a Bitcoin ETF. Galaxy Digital going to have a Bitcoin ETF, but you're not asset managers. You're not saying to the client in a fiduciary relationship, by the way, you're supposed to have X percentage points of Bitcoin.
Well, Ron, to that point though, I was gonna ask. So it seems like Rick Reeder is open-minded to Bitcoin. At least that's sort of heard from his public comments and those types of things, right? Like when I look at the number of funds that he manages, I'll just pull it up. I haven't done this analysis myself. I'm just kind of like spitting this out as I sort of think. Let me see if I can share my screen on this. There we go. All right. Do you see my Bloomberg screen?
Yep.
So I'm looking at like all these funds that he's responsible for managing, right? And the question I ask is like, how much of these funds, or which one of these funds could have a allocation to a Bitcoin spot ETF? Similar to, how like ARK has like some Bitcoin allocation or GBTC, I think it was a GBTC allocation in all their ARK actively managed ETFs. And how many, and also like, yeah.
Yeah, I think part of it's like the mandate of those funds and the prospectus and what constrains them. How much freedom do they have?
Right, and the question is how many other Rick Readers are there, right? Like of folks who are like personally bullish and then manage a broad mandate fund that's large enough in size.
Well, I would say you're going to get us ditching our sell the news here.
As an additional data point here, Pranav, Fidelity, FMR, not Fidelity Investments, but the mutual fund side of that house, they hired in the spring, they hired a head of crypto token research at the equity desk at FMR. So I'll be surprised if we don't start to see some of their funds also do some kind of allocation, right? I mean, they're an asset manager as well.
Yeah, ultimately, I think it's going to be slow uptake because there's going to be a sales process. They have to wait for the operational mechanisms to work, and advisors aren't too different from retail investors. They're a little bit smarter, I would say, a little bit more thoughtful, but they are still sentiment driven. So retail starting to show up in Bitcoin over the last 2 months. I'm sure when you went back for Thanksgiving holiday, Christmas and New Year's is a different conversation. You're starting to get the text message from your friend, should I buy this or that? So there's some fine. I think it'll be a slower uptake. On the other hand, BlackRock should sell into the Bitcoin halving narrative, which is a powerful narrative. It's a great sales tactic. If you're a sales manager at BlackRock and you're calling on your clients, you look at the data. So I think that is going to be a tailwind. But I think where I'm netting out is that it is going to be a sell the news event, but it is a buy the dip opportunity.
Yeah, I think dips are meant to be bought, but I mean, again, they're not all just issuers, right? Invesco, Fidelity, BlackRock, they're large asset managers too. You're going to see a lot of research come out, and the case being quite articulated, or made quite articulately. I can't even articulate the word articulate. It's late in the day. So I mean, there are.
That's a new rap line.
Yeah, there are big asset managers that have these things, that have a vested interest, and as you know, like the early adopters and movers in the ETF game tend to win, right? So I think I don't disagree. There's definitely machinery. Even just the research and marketing machinery from these asset managers is going to take some time to spin up. Whether they're successful and can, selling the products or the case for Bitcoin, I guess remains to be seen. But there's gonna be a big push, right?
That's a great point.
There's only a couple like gold ETFs that have any meaningful AUM.
How many of the ETH futures? Either of you guys might know, ETH futures ETF wound down. There was 8 at launch, and I think at least 2 or 3 of them wound down a month after.
Yeah, I think there's only 4 now, maybe 4 or 5.
So that's a great. I mean, none of these guys are doing. None of the 10 who are doing this to wind it down in a month. So it's going to be pedal to the metal.
Yeah, that marketing process is going to be powerful. How many Super Bowl ads are we going to see for Bitcoin?
That's a good question. I think you'd want to say a couple or at least one. I will say the timing just is a little tricky, right? I mean, there's a reason why you haven't seen any issuers obviously actually market any products actually yet, right? Because they're currently unregistered securities, right? To the extent they become registered and effective.
Or
sometime
the
soon.
commodities, they can offer obviously.
Right.
futures.
Well, that's why the ads that you see are all basically just advertising Bitcoin itself, right? and saying their names. And so, yeah, I mean, I think those are really expensive ads, right? That the Super Bowl, I forget, I saw an estimate, it was like 20 million now. This year is expected 15 to 20 million for one spot. So I think you're going to still see issuers be cautious in actually securing that. So I would say it's not bearish if we don't actually see any, only because the timing is so close to the event that they may not be ready. Although, when is the Super Bowl? It gets later and later every year.
February, what's it, the first or second week in February?
Usually.
One thing that's interesting to me is this whole seeding process, and it's like seeding with 100K or 10K, whatever, and BlackRock put in 10. Alex, I don't know what Galaxy put in, but and then you have Bitwise that said, non-binding interest letter, 200 million, like, maybe it could be more, could be less, could be none. That's interesting. But like, what do you like? Obviously, every single one of these asset managers could seed it with like way more than the 10 or 25 million that's being in there. And in fact, if you want the best head start, the simplest thing you can do is have better liquidity in a larger vehicle. And for example, Pranav, as you pointed out, BlackRock has maybe 10 funds that could deploy into it day one. They could pull funds from there, or they could seed it off their balance sheet. But that's an interesting unknown variable to me. And Alex, you might have thinking through, obviously you're incentivized to not publish this, right? If it's real, if I have 500 million of I'm going to seed it with, or I know, my strong relationship Wall Street partner is going to seed it with, I'm not going to telegraph that. Like that's going to be as close to the chest as possible. What upside flows do you think could be there?
It's a good point. It is a competitive dynamic, I think, on this. I think it having a more liquid, larger fund early is the same as winning a lot of flows early, right? Like it's right. What's the best advertising you can do? I guess there's two things you can do to advertise your fund over someone else's. One, have higher returns, and two, have more AUM, right? So, well, your returns are tied to a commodity here, so that's not really at issue, although we'd like Bitcoin to go up, but like the AUM is the game. And so, I don't think I've seen pretty much, seeding it with a small amount, whatever that was that BlackRock said, like, you don't really need that much to operationally make these things work on day one, right? So like, I don't think that's anything bearish to think about if it's not some giant number right now. But yeah, I don't think for the majors that have applications, we've seen them say what they're going to do yet. It's definitely a competitive dynamic.
It's not downside risk.
Yeah, I agree.
No,
I don't think it's a
so.
major specific bid. They don't want to put prop capital in a significant manner to work to drive Bitcoin. I do agree the MSTR flows are powerful. And going back to the earlier chart that was shared around Asia flows and US flows and the Asian bid catching up, and I think looking at those flows matters. And that is what I'll be focused on.
The most
someone earlier brought up, like, talking about Bitcoin with your family over Christmas or the holidays or whatever.
Yeah.
And part of me feels like I don't think retail really cares about Bitcoin as much as they care about other crap, like, I mean, not to be the party pooper on this call, but like the thing that concerns me is crypto markets in general right now is I'll share this one thing. So let me know once you see my screen. But if you kind of look at just performance by buckets, like the meme bucket has been the best performing thing by the last 3 months. That's kind of typical, like, late cycle type behavior in crypto, where like people want to chase like the next meme coin. And anyways, like, this is what kind of concerns me, this sort of speculative behavior. And that's where I think retail interest is going. I don't think retail is necessarily like that focused on Bitcoin per se.
Yeah, I think that's right. It felt very frothy to the end of the fall for sure. I mean, even now you've seen meme coins on, I don't want to say any specifics myself, but there's literally been yet another meme coin pumping an entire alt L1 ecosystem just like this morning and yesterday, right? So like,
right.
I don't like that. It doesn't make me feel. On the other hand, it's sort of like, we have mini cycles, right? So like, it's sort of, I think that mini cycle kind of ran its course in the fall. I guess maybe it's still some running now. I think we're going to reset a bit, and then we'll have another sort of cycle from, you know, Q1 to Q3. I mean, the way I sort of think about just broadly is you have a Bitcoin driven market as these market access vehicles are approved, assuming they're approved. Maybe like through the halving, maybe there's mini cycles even inside there, but then, right, Ethereum futures, Ethereum ETFs, potentially like the dates are like May and June for when they might be approved. And so, and if that looks like it's going to happen, then you could see maybe the big cycle continues Ethereum, Bitcoin, Ethereum, alt season, Bitcoin, Ethereum. Yes. The one thing I would say, I like Quinn's point too about dampening volatility. They also will dampen the cycles, right? These ETFs. When you put money in a Bitcoin ETF, it's not sitting on Poloniex ready to go into some ETH and then some meme coin, right? It's and if it is an advisor-driven market, which I think it will be, but regardless if it is, they also don't day trade in all their sub-client accounts all day, right? Like they're not like, oh my God, I was long Bitcoin 2 days ago, but I got to move everyone into ETH now. That's not how they think either.
They allocate, right?
Yeah. Exactly. So I think it's one of the really interesting things that could come out of the ETFs, Bitcoins, whether we get them for ETH2, is a real segmentation, right? And perhaps a breakdown finally, not that it needs to happen, but that it's been so long in the making of this constant cyclical market that we have in crypto.
Although the only counterpoint to that there is like everyone in their Robinhood account can now trade 0-day options on Bitcoin.
Yeah, that's true. And by the way, you can trade Bitcoin and ETH on a spot at Fidelity, right? And you're going to be able to probably trade it a lot of other places as well. So maybe that's the other interesting thing here is like, I think Fidelity is the only major brokerage that actually allows spot trading right now. And they have Bitcoin and ETH. But I mean, you could imagine that many others add that too. And what does that do to ETFs one day? It's not, why would you buy the ETF if you could buy the spot at the same place that issues the ETF, right? I mean, like, it's not, it's going to be an interesting thing because you can't buy spot gold in your Fidelity. Well, I guess you might be able to, like through a metals desk or something, but most people can't actually just like click a button and buy gold, right? They have to buy the ETF, or they got to go down to the gold store or the pawn shop and buy it in person. Nobody wants to do that except for some, you know, true gold bugs, right? And you certainly don't do that in size. So this could be, you still have the exchanges like a Coinbase or a Kraken. You've got the institutional desks, you know, Galaxy, a Cumberland, whomever, Wintermute, and then you've got the ETF issuers. But you may yet still have more of the brokerages actually enter the game directly as well. Like that's something people haven't talked about in a while, but Fidelity is really figuring this out, right? First, it was Robinhood with only buy, sell, and no send, receive. Then it was PayPal with buy, sell, and no send, receive. They've both added wallets, right? Fidelity is now buy, sell, and no send, receive. It'll probably add full wallet capabilities. Like what? I mean, they might start making a lot of money on that too, and their competitors might get into the game also, which makes the whole thing tricky. I mean, advisors, for that matter, might be able to buy spot in their users' accounts. So
it's a good point. In the peak of the bull last cycle, Robinhood went from a complete, you know, Fidelity brokerage, stock, equity, and then 30% of the revenues was crypto trading
we had to I had to classify whatever that, remember that final private raise they did before they went public. In our crypto VC report, we were like, it was maybe like Q1 21 or something like that. Mm-hmm. Like we had to classify them as a crypto company. Yeah. And we were like, I can't take this raise. It was a ludicrous raise that jumped the whole numbers of the crypto VC that quarter up a lot, but I was like, I mean, this is a crypto company. I don't know what to say.
Yeah, how many more Robinhoods are, you know, that's gonna happen,
right?
5 more times next cycle. Bullish long term. The other thing on your point, Pranav and Alex, on the meme coins is, I think we're in this weird middle ground where the hysteria and momentum and almost early stage of FOMO have really shot up because everybody in crypto is like just suffered from this long winter and can't wait to see a green candle. And then that stems out the risk curve into alts and memes. But stablecoin supply hasn't really grown. And that's really, to me, the retail, you know, interest care, you know, barometer. And that peaked out like mid-December and has kind of been stable, not really going anywhere since. So I think that's another, you know, the hot ball money started and it's flowing into to further out the risk. And just, it's kind of anecdotally, but it does feel quite consensus that 2024 is going to be a banner year for the industry. And that's not not saying that's not going to be the case, but typically there is some gut wrenching thing that occurs to shake that before you can really cement it.
Right. We haven't had a serious correction. And I would also add that it's consensus that it's a sell the news event. If I look at most of the conversations I'm having, if you look at the discussion we're having here, although it's also consistency by the dip. So non-consensus, you hodl and goes up, right? It goes.
Nobody knows what consensus is at this point, right?
Well,
I mean, that was one of the good things
can,
about this little washout, though. If it was related, let's say the matrix port note was the main cause. I don't know if it actually was, but you know how these things work. Why is the market gone down? I don't know. We point to something. It's kind of the inverse of that Cointelegraph tweet, right? I mean, like if this was the bearish ETFs aren't going to be approved candle, it really wasn't that bad. You know what I'm saying? I mean, now granted, if that announcement I think came from the SEC and not from some obscure
Not
Asian
like the
research
DB
desk,
10K account.
yeah, it would probably be a little different. But I still, though, I mean, I feel pretty constructive on the you know, we were so overheated. I can't remember, Pranav, at the beginning of you showed the funding rates. I mean, everything was ludicrously positive. So yeah, I think this was.
And we held the range. Positive. We held the up. We held the higher lows. You know, we held the upward trajectory. I agree, Alex.
Terrific. Any concluding thoughts? This has been absolutely fantastic. Great perspective from everyone.
Be a fun couple of weeks. Probably could do a new one of these every day for the next week, changing our minds.
Oh boy.
Can we get this as crypto town hall? I mean, this was a much better conversation than some that I see.
We'll definitely do it again. So thank you so much for joining us. And stay tuned. It's going to be an exciting couple of days and weeks. Have a good one, everyone.
Thanks, everybody.
Take care.
Take care.